Taiwanese index is down 0.7%.
The Federal Reserve, after hiking 75 basis points in the July meeting, decided that they would anticipated further rate hikes ahead.
Going by the options data, the first base for Nifty is at 17,860. Now, I'm not saying we go there. What I'm saying is that if you get something closer to 17,860, the risk reward becomes favorable.
As far as the total bookings are concerned, yesterday we crossed the 40,000 numbers.
The Nifty is opening just about 34, 35 points down.
We could stay higher for longer, but all markets, including ours, are looking very overbought.
It was a trade of 10.2 crore shares, which is worth 17.2% equity that changed hands in just one trade.
Right now, we're down about 0.15%.
RBI has released a discussion paper on the charges levied in payment systems, but importantly, it has not taken a stance on these just yet.
There is technology put to work at scale in unprecedented ways in India, and as a tech company and as a tech geek, I find that hugely exciting.
It's a down day for frontline Indian generic pharma companies such as Sun Pharma, Dr. Reddy's and Cipla.
Good afternoon and welcome to Closing Bell. I am Anuj, with me Prashant and Nigel. And the market, well, it's really been a very resilient market because we've had two dips and both have been bought. One was at the open itself, of course, which sort of bottomed out at 17,863. And the other one happened around noon, which actually broke 17,860. We went to somewhere around 17,850, but from there we have bounced back. And what stands out clearly today is that while IT is a bit soft, banks have outperformed. So Bank Nifty is doing well, and a lot of individual stocks. Of course, the market bets today again has been in favor of the advances. So that way things are still looking up. And of course, in the index, the stock that stands out is Kotak Mahindra Bank. We'll discuss all of that as we move along the show. Guys, hi, good afternoon.
Afternoon, Anuj. Afternoon, Nigel. I mean, I think absolutely the market, down 75 point intraday, but coming back each and every time. And how many dips have we had and how many pullbacks just today? And it kind of tells you the story of basically what market participants expect the market to do, those who are following momentum and those who are expecting, better tidings one way or the other. The advantage, the initiative is very much with the bulls who are hoping that this continues. Market breadth, as Anuj just pointed out, is positive, not by a huge margin, but I think, advances outnumber declines by about 300, 350 odd stocks or so. More stock-specific day, which we will get to here over the next 60 minutes. Nigel, hi.
Well, plenty to track in the next 60 minutes or so. First up, let's run you through what all we have lined up on the show for you. Kotak Mahindra Bank will be on our radar ahead of the FTSE India semi-annual review announcement. That's tomorrow. The street is divided on whether it will be added or not. More details coming up on the show. IEX will be on our radar. The stock is under pressure on the back of fresh news flow. More details on that, what's dragging the stock and what you need to track from here on. That's something that we'll be getting for you. And finally, Anshul Sehgal, the head and executive VP of Kotak PMS, will be joining to discuss more on the markets and his top portfolio calls as well.
Okay, but let's do one thing. Let's first get you the last hour calls rather. We have Mitesh Thakkar joining us on top of the show. Mitesh, hi, good afternoon. So the dips getting bought once again, but at higher level, the momentum is missing. How would you categorize this market and what would be your stock calls?
Yeah. Good afternoon. So I think the key difference is that, while the dips are getting bought, last few days what we saw was that on declines when they were being bought, we were seeing market race to a new high and turn into positive immediately, which has not happened today. And, I think I've been calling for last 4 days, and in that 4 days, the market has rallied by about 300, 350 points. Saying that it's an overbought market and we're not very sure to enter. So I think this requires some consolidation. I would agree with you. I think 17,800, 850 still remains the first zone to, possibly explore long positions. But before that, I think, I'll be slightly skeptical to enter on the index positions. But otherwise, stocks still look good. I think India Cement is breaking out. That's a buy with a stop at about levels of 196.5. And I would look at targets of 220 on the upside over here. And the other one which I like is Emphasis. I think it's been consolidating for the last 6-7 days, just on the verge of giving a breakout. So it's a conditional buy about 24.15 odd levels. It's trading around 24.10, and buy about that and keep a stop below 23.85 for targets of 2,500.
Okay, Mitesh, thanks very much for that. Come back to you in a bit for more. Devin Choksi is also joining us of KR Choksi. Devin, good afternoon. Good to have you with us on the program. I mean, it's a similar kind of question. Near-term market, a lot of debate and discussion around that, given the extent of the move that we've had, and it's still going pretty good. Just down 20 points on the day so far. Your thoughts, David?
Hey, Prashant, good afternoon. Well, I think on the face of it, I think the last 4 weeks of participation in the market has increased from the FII side. And that has basically, I think, helped the market to recover and then now rally. The fundamentals of the markets are in place. And I think with the result season over, the first quarter's results, I think, are more or less in line with market's expectation, or at least in some cases, I think, a little above the expectation. So obviously, I think the flow of money once again have started coming into Indian market. In my viewpoint, I think we are coming closer to the all-time high levels once again. That would invite some amount of correction, at least in the near term. But again, I believe that I think every correction in the market would be bought into, and probably I think selective stock buying will continue in the market. Fortunately, some of the large cap companies within the banking space, some of the large cap companies like Reliance, I think have been available up till now at a corrected valuations. And I think as a result of which, it is also attracting new funds to come into the market. So overall, I think the approach will be selective. Second half of the financial year, I think remains relatively more promising. On one side, I think higher amount of agri output post good monsoon is expected, and that could possibly revive the consumption buying into the rural economy. At the same time, I think inflation remaining under control, I think would keep the interest rate scenario under check. And as a result of which, I think the buying could once again get helped because of that. And because of the spending in the economy by the government and the infrastructure, I think this is also going to invite, I think, higher amount of industrial consumptions. And as a result of which, I think better corporate earnings. All in all put together, we believe that I think every correction in the market would be bought into. I think quality of investment would definitely be looked at, I think, by some of the global players to look into India markets.
Okay, all right. Got that, Deven. Well, just hold on to that thought, Deven. I want to ask you about Kotak Mahindra Bank. But before that, just pull up a few stocks from the broader markets. Actually, pull up the advanced decline ratio first. Those lines are gradually getting closer to each other. Earlier today, they were closer around 1,800 stocks that were advancing 1,900 odd. They've been getting slowly and steadily closer to each other. But there are quite a few stocks that are moving around. Dalmia Bharat, well, that stock has spiked to the high point of the day as we speak. RBL Bank as well. It was trading in the red. That's seen a sharp spike up as well. And talking about some of these cement companies, it appears the street is hoping that there's going to be a lot of consolidation in the industry. You have stocks like Sanghi Industries. Just take a look at that. One week chart should come up for you. Sharp uptick is what we're seeing out there. India Cements as well. I'm talking about the 6 to 15 million ton plants out there. Today as well, Sanghi Industries is up 7%. You pull up the last 7 days, it's up close to around 20%. Remember, the promoter entity came in there and they picked up some shares from the open market as well. So it appears some of these names moving up on the hopes of consolidation and hopes that from Q3 onwards, we'll see a recovery in earnings. Q2, it's a given, it's going to be a washout. But let's focus on the banking space. Kotak Mahindra Bank, that's the one on our radar. On the FTSE India semi-annual review announcement, that's expected tomorrow. Now, the street is divided on whether or not it will be added into the FTSE list. Abhishek's here to tell us, what a brokerage note is making on the same. Abhishek?
Well, Nigel, we have one brokerage note, that is IFL Alternate Research on Kotak Mahindra Bank. They say that, in the FTSE India September rebalance annual review, which will be announced tomorrow, that is 19th of August, the adjustments will take place on 16th of September. They believe that Kotak Mahindra Bank is one of the high-profile inclusion candidate that can be seen into the rebalancing portfolio. So they expect Kotak Mahindra Bank to get included with an investability of about 5% in the first tranche, and if at all, index provider decides to include with a full investable float, you can see, investment of about $700 million into Kotak Mahindra Bank, and that is why the stock is surging in trade today. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, the stock is clearly excited on hopes that maybe it gets included. Deven, what's your view on the stock? I mean, we'll have to wait by for that piece of news as well. But for the time being, up closer around 3%, at around 1,900 rupees odd. Would you put your money in Kotak, or do you believe there are other banks that you would rather allocate money to?
So, Nigel, I think the company has remained, I think, fundamentally extremely sound. If you look at, I think, last few quarters of results, even during the challenging times of pandemic, I think they've been much smarter in managing their books, and I think they have not ventured into aggressive lending either. As a result of it, their non-performing asset ratio has remained under control. So financial performance-wise, I think the company remains, I think, quite attractively positioned. Each of their subsidiaries, I think, which they have brought in, I think they are also basically performing well. On those front, I think we are not doubting anything. The company has basically systematically moved into the corporate side of the lending, and I think now increasing the pie through infrastructure lending as well. So that area also, I think, remains promising going forward. The stock has remained largely underperformer in the market. I think that could possibly be one of the reasons for which I think the skepticism is there around the retirement of Mr. Kotak. And that is where I think possibly I think the stock didn't perform. But given the kind of news that I think the stock could possibly get added into FTSE kind of index, it could invite, I think, a fresh buying into the counter. As such, I think the stock has remained, I think, under the subdued price level. So there may be an opportunity around, I think, for investors, given the strong fundamentals.
Okay, the market's picking up pace once again. By the way, don't forget that. Look at the Bank Nifty in particular. And the stocks of the day today have again been from the Adani Group. Look at Adani Enterprises. It's up 5% now, fresh all-time high on that stock. Devan, any view on this? Massive move.
Yeah, Anuj, I think, once again, I think the fundamentals positions of the company has not changed overnight. And I think the business outlook for the group as a whole, I think, remains extremely positive. One of the only group, probably, I think, if one has to look at India as an infrastructure story, that probably people would like to come and invest into that. Of course, I think most of the companies' valuations are at, I think, reasonably high level.
Okay, all right. Let's talk about another stock then, IEX. That's under some pressure in today's trading session on fears that their volumes could get hit in the near term. This as 13 states may be barred from participating in the power exchange under the new late payment surcharge rules. The idea behind this, remember, is to reduce the Genco's overdues. Now, analysts estimate that out of these 13 states, well, half of the states could contribute nearly around 40 to around 50% of IEX total volumes. Now, the applicability of this particular ban could be from tomorrow. That's from 19th of August. So, IEX volumes will have to be tracked very, very closely from tomorrow itself. The order might bring about some discipline into the system on the receivables portion of it. But in the short term, it could have its consequences, like is the case on IEX. Now, since the states are hard-pressed for power, the repayment of the dues could come in which will diffuse the situation. That's the hope as well. Short point is, it could have a bit of a negative impact on IEX traded volumes in the near term. Meanwhile, resolution will be eyed as the states look to clear these overdues as well. There's a hope that in fact these dues will be cleared out, and that's why the stock has recovered a little bit from the low point of the day. It was down close to around 6%. Now it's down only around 3% approximately. For the time being though, let's slip into a short break. You come back, we'll get chatting with Anshul Sehgal, the head and executive VP of Kotak PMS, will be joining in to discuss his take on the markets. Well, it's almost green yet again. That's been the trend. You'll get a dip, you buy the dip, and in fact, you make some money. And that's precisely what's happened yet again. The market's almost moving into the green as we speak. But since, we've just completed our lunch, I think it makes sense to talk about Jubilant FoodWorks. Devan, I want your view on the stock. It's seen a good recovery from the lows. Mangalam was telling us earlier today that the FI holding in the company had come down from around 40%. It came down to around 20-29% odd. Now, given that FI flows have come back big time, the hope is that, in fact, maybe they're putting some money back into the stock. It's up close to around 3%, at around 625. What's your view on the stock?
Nigel, the valuation-wise, I think it is still remaining one of the expensive proposition. No doubt, I think the new franchisee that they are adding into the business, particularly for the chicken foods, I guess I think that would possibly be directly competing with KFC. And that is one of the reasons for which I think the reason for attracting further amount of, I think, the investment into the counter. But as I see it, I think except Domino's, probably I think other franchises are not performing as great as I think they should have been. And which could be one of the reasons for which I think the stock not performing. Of course, I think the selling by the FIs earlier. Not too sure whether at an expensive valuation, I think would like to buy into this QSR format immediately. maybe I think this particular situation I think is prevalent across I think most of the some companies. But in this space, I think probably I think our larger conviction stays with Debian International. There we find I think relatively higher amount of scope for upside if one has to invest into this particular format.
Okay, all right, Devin. Thanks very much for joining us as always. It's a pleasure. Actually, Devin, sorry, apologies. Stay with us. Just one more question on pharma that we wanted to put to you. But before that, let's actually go across to Ekta. I mean, stocks have slipped after a sell-off in US generics names following a dispute settlement over Rantidine. This is a high-risk drug. Ekta is joining in to fill us as far as what has happened. And Devin, after that, I'll come to you for a quick view. Ekta, over to you for now.
Well, yes, a couple of these pharma stocks have been under pressure in today's trading session, and that's possibly because of the kind of correction that we saw in the US generic drug stocks overnight, with the likes of Teva down around 9% Taro correcting over 3% as well in yesterday's trading session in the US. Now, one of the reasons for this possible correction is because there was a settlement which took place with regards to the antacid, commonly used antacid drug, Zantac generic, and the branded version of this particular drug, where there have been concerns that it contains a cancer-causing substance, NDMA, and that was the reason why the US FDA in fact pulled out the drug in 2020. There was a settlement which took place with a 79-year-old man, Joseph Bayer, who claimed that this particular drug was the reason that he got esophageal cancer. Now, while there was a settlement of the tune of around $500,000, which included companies such as Dr. Reddy's as well as Sun Pharma, as well as the US generic companies such as Teva, the fear is that there could be more such litigations that the US generic companies could be slapped with in terms of possible settlements, and there could be a long road ahead for other drugs where there have been concerns that it contains NDMA as well. So that's the reason for the possible correction in overnights in the US stocks overnight, as well as the fact that there could be some amount of pressure when it comes to US price pressure in the US markets because of steps such as the government in fact signing a law to reduce prescription prices for drugs in the US. No direct impact on generic drug manufacturers, but the tone seems to be more on the negative side.
Lower prices, basically. Ekta, thanks very much for that. Devin, any thoughts, the pharma space?
Prashant, I would think that one can't be generalizing, I think, the entire space, I think, because of one development like this. More importantly, I think some of the Indian pharma companies have very systematically put into the specialty products, and I think specialty generics, if I have to call it as, these are complex delivery of complex drugs, I think, which are getting delivered, I think, through new mechanism. So from that perspective, if you are looking at it, I think most of the companies are relatively much more stable. And I think that India's presence, I think, in the world market, of course, US remains, I think, a dominant one. But at the same time, I think the other markets of the world also, I think India is basically spreading it well, including, I think, some of the leading companies. So from that perspective, I don't see too much of a risk on that particular side. I think maybe this news will pass by. I guess I think that's nothing much that I can read beyond this particular instance, I think, that has been reported.
Okay, well, just by the way, just look at the market one more time, and there's quite a bit of action that you're seeing right now. The Nifty is once again breaking into the green. For the Nifty Bank, it will be interesting to see if 39,600 acts as sort of resistance, because that's where you have the high call base. But for now, the market is clearly in a tendency of buying the dip, and a lot of stocks doing well right now. In the broader market, there are a couple of stocks which stand out. I mean, again, like I said yesterday as well, this is a market where a lot of forgotten stocks are coming back. Ruby Mills with good volumes. That stock, in fact, is hit a fresh 52-week high, and in fact, in the last 2 or 3 days, it's gone up 46% or thereabout. There it is, 18% gain in today's trade. So that's made a big comeback. DCM is the other one. Jindal Drilling, Bharat Wire. So a lot of forgotten stocks are sort of making a bit of a comeback. Devin, before we let you go, I just wanted your thoughts on something like an, RBL Bank, because it's sort of showing some resilience after that collapse that we had around 80. It's back to 100, 105. Do you buy it here or give it a pass?
So Anuj, I think though we don't directly track this company, and I think neither it is under recommendation, but we believe that in general, some of the banking companies I think are registering a good amount of what we call presence as far as I think the investors' portfolio is concerned. Largely because of the fact that I think the credit offtake has been improving, including the industrial credit, corporate credit, I think, which is showing the signs of, I think, distinct improvement. Along with the retail credit, industrial credit, I think both are, I think, registering a good amount of growth. I would think that I think some of the stronger banks with a larger amount of AUM and the capability to raise deposits, I think would be relatively a better choice to be into as far as investment outlook is concerned. Maybe you could include, I think, names like ICICI, Kotak, and HDFC into this space, where I think one could possibly argue that given the size, I think they would get maximum gain out of this particular opportunity coming their way, given the kind of credit growth which we are experiencing currently.
Okay, all right. Devin, thank you very much. Great speaking with you. Appreciate you joining in with that perspective. Anshul Sehgal is now joining us. He's Head and Executive Vice President of Kotak PMS. Anshul, pleasure having you back on the program. Thank you very much for your time. Are you at all sort of, fielding questions or sort of asking questions about what next for the market in the near term? Because there is a lot of hand-wringing and head-scratching which is going on in terms of what is up, and just an unstoppable move is what we've seen.
Yes, Prashant, thanks for having me. Actually, if you go back to January, February of this year, and you see the market positioning around that time and how it progressed till, say, June, you would notice that the FPI, as also the HNIs in the market, moved markedly bearish between February and June. As also, portfolio managers started holding a lot of cash. That told you that the market's makeup was negative, that there was a lot of bearishness that was already built into the markets, and any small positive trigger would take the markets up quite high. Lo and behold, that's what's happened July onwards. And we've seen between then and today about a 16-17% uptick in the frontline index. And even this move is most underbought. I mean, if you speak with 10 people on the street, 9 will tell you sell the rally, and that makes you think that this may have legs. So I wouldn't be a seller aggressively into this rally at this time.
Okay, won't be a seller into this rally, aggressive seller in this rally. Anshul, hi, good afternoon. So what kind of stocks would you buy right now in this market after the rally?
Afternoon, Anuj. So there, I would look at stocks where earnings visibility is strong. And that, there are many segments in the market where we are seeing that kind of visibility in the markets. Real estate as a space is seeing that visibility both upstream as also downstream within real estate, which means the builders as also building material providers. We are seeing strength in capital goods, autos. We are seeing also strength in sort of import substitution, whether it is sugar, which is substituting oil imports, or defense, which is again substituting a lot of imports into the country. In those pockets, we are seeing strength. So earnings visibility is what we will buy into. And in our judgment, say the next 12 months, you will see companies which seemingly look expensive today become even more expensive.
All right. Hi, Anshul. Good speaking to you as always. Anshul, give us a split up of your portfolio, right? I recall when we spoke last, I think the largest quantum of largest allocation was to small caps, then it was the large caps, and then it was the mid caps. How has that changed around? And also the cash levels, I think, were around 8 to around 9%. The last few months, how has that number moved? Were you in double digits and you'll have slowly been allocating? How much do you still have in that?
So we've allocated more to equities. We've reduced the cash in the portfolio. Mm-hmm. And within the portfolio, we've added more to the mid caps. And so you will see the weight of mid caps having moved up. Weight of mid and small caps versus large caps, that has moved up. And so I'd say about 60 to 65% would be mid and small caps. Remaining would be large caps.
So I'm looking at some of what you own. There are names like Balrampur Chini, Blue Star, and I noticed Cyient, which you also own. Again, that is a sort of R&D play, right? Largely.
It is an ER&D play. That's right. So it's a IT company in the ER&D space, and particularly it caters to the aerospace and a transportation segment, which is railways. And we see that after a protracted weakness in that space, there may be revival, there may be some tailwinds coming into that space. And as a result, this pocket may be a beneficiary of that trend, which is why we own this name in the portfolio.
Because there are others, right? There is L&T Tech, there is Tata Elxsi on the other end of the spectrum, and then there is Cyient. I mean, is this a turnaround play in that sense, or is it just a play on ER&D?
I wouldn't say that it is a turnaround play so much, because earnings have always been strong in this pocket. In terms of valuations, this space has been re-rated quite meaningfully, and so some of the names that you took, those names have valuations which are quite exorbitant, and which makes us stay away from some of those names. While the name that we own in the portfolio is still reasonably priced, and for that reason, with earnings tailwinds in the works and valuations being reasonable, our judgment is that room for upside remains in this name in comparison to some of the other names that you took.
Have you looked at, I mean, talking about IT, have you ever looked at Zensar Tech, Anshul?
Frankly, Prashant, I wouldn't want to talk about individual names, but sure. I may have looked at it in the past.
Okay.
But I wouldn't want to really, I don't cover it too closely, so sure. I may not be the right person.
I just put that because you own Cyient, and it probably, if you do draw up a list of stocks ranked on P multiples, it would rank right at the. I mean, these two would rank right at the bottom, which is what you want. You don't want to buy 100 P stocks. You want to buy relatively cheaper stocks. I mean, is that one way to go about it? I mean, look for opportunities where, stocks have not really participated in any big, meaningful way when the markets are at all-time highs. I mean, it's hard to find opportunities, isn't it?
That would make investing very simple. And in fact, you wouldn't need a fund manager. All you would need is an Excel sheet, because you could plot stocks versus earnings and just figure out what the price to earnings ratios are and invest accordingly. But as we all know, investing is much more complex than that. You've got to understand way too many dynamics to make a call on a stock. It's not just about valuations. It is about the earnings power of a company. Whether what I mean by earnings power is that if a company has margins of 5% today, is that the stable long-term margin of a company, or can the margins expand to 10%? Now, that cannot be plotted on an Excel sheet. That requires some judgment. And if you can build that, if you can understand that aspect, and then understand, of course, other dynamics like competitive advantages, balance sheet strength, etc., that as a whole will give you a perspective on whether a stock can be bought or not. This is, again, a complex market. We think that some of the expensive names, or purportedly expensive names, will become more expensive because they will have earnings visibility. And that's what one should seek.
What we'll do is we'll shift focus for now. Amrish, of course, is still with us. But what we'll do is we'll shift focus to something very interesting from the corporate arena, which is coming through. This is corporate commentary from the very top. Our managing editor, Shireen Bunn, caught up with Michael Maybach on his first visit to India after taking charge as the global CEO of MasterCard. Here are excerpts from that exclusive conversation. Listen in.
A almost physical sense of optimism. I mean, it's probably helped by the fact that you look back on 75 years and then all the achievements. But my reference point was really the visit 4 years ago in 2018. What I see today, particularly through the lens of our business, when we look at the digital economy and how it's growing in India and the growth rates of UPI and so forth, there is technology put to work at scale in unprecedented ways in India. And as a tech company and as a tech geek, I find that hugely exciting. So I'm going to go back and see there's models emerging in India that we should all think about and see what else we can do and how we evolve our business in partnerships with fintechs and other companies that are using this technology here in India. That was the conversation at the dinner tables last night here in the hotel.
So I just want to take that point forward. From your strategy of buy, build, or sort of partner, where does India fit into that strategy currently, and what is it going to mean in terms of future investments?
So let me just say a few things. We're not a credit card company to start with, so let's just...
I think that transition you've been on for the last couple of years.
Let's just baseline on that. So as a payment technology company, we kind of broadly speaking, what we do, our strategy is be in payments, whatever choice of payments is there. Like India is offering a lot more choice in payments than was there even 5 years ago. So it might have been cards, and now it's UPI, it's account-to-account, it's push payments. You want it, you have it in India. So we want to offer solutions in all those spaces. That's our stated strategy. It's different in different countries, and here in India, certainly there's more choice and bid for that. But then that's also the question. So if you have that rapidly rising digital economy with all these different payment choices for people, how do you keep it safe? How do you keep it simple? That's another part of our strategy, where we say every kind of service that makes this simple, address the cyber risks, is your digital identity compromised, all those kind of things we take care of, and we then partner. And that comes to the partnership point. We say, on payments, there's a lot of partnerships required, for example, on nascent areas of payments, B2B payments. There's a lot of inefficiency in B2B payments, which we bring solutions to the party. Basic P2P payments, here in India, UPIs are an amazing success. We don't really need to partner on that, but the question on cybersecurity and how do you make sure that these payments remain safe as this becomes one of the, if not the largest digital economy in the world, that's a partnership area. Then you go into some of the big questions that India is addressing that many other countries will face, and that's the question of an inclusive digital economy. Hundreds of millions of people. We think there's going to be 100 million people that join the formal digital economy in India in the next couple of years. Who else? How do you do this? And what partnerships are required? We've been on a financial inclusion trip for years. I ran our Africa business. That's why I got really in tune with that topic, and I think there's amazing drive here on that. There's technology developed here, but we also have experience that we can bring to the party. So all sorts of partnerships across the board. And in my conversation with our employees here, look at us, where's it going? Where's the puck going? What else can we bring to India's journey to make that digital India vision a reality?
So where is the puck going? Especially in the context of financial inclusion, voice commerce, for instance. I know that this is something that you talk about and this is something that you believe in as well. What kind of innovations can we expect out of India that can possibly be exportable?
I think in the end where it's going to go, pay every which way you want, whenever you want, always on the basis of it's safe and secure. So I think that's the headline. And that turns out in many different ways. It's going to be paying in the metaverse. It's going to be paying through voice. It's going to be paying offline in areas of the country where you have no GSM coverage or it's not as good as it needs to be. So every bit of technology that's there today is going to give us a huge boost because all that is at disposal in India. So I wouldn't think there's one particular technology. My general answer on when I think about the future of payments and the future of technology is convergence of a lot of fundamental underlying technologies, AI, 5G or 6G, cloud, edge computing, all of that will make sure that you can do whatever you want whenever you want it in terms of payments at all times. This is converging, gives you all sorts of data. I think the question of trust and security is really the most important in a digital economy. Imagine that small business that is reopening the doors after COVID, and then now they have a digital business. because they felt that during COVID that was a thing, and now they're going to operate in a different way than they had before, but they have not learned how to keep their business safe. That trust issue, if something goes wrong, that's going to be a problem, not only for that one business, because people talk, and then the whole small and micro businesses, I think are not going to take all the potential from the digital economy. So trust and security is super important. That's what we stand for, what we bring. And it was a good part of the conversations with government as well here.
And don't forget to catch the full conversation at 6:30 p.m. and 9:30 p.m. only on CNBC-TV18. Well, time to slip into a short break. You come back. We'll continue our focus on the markets. The final 10 minutes coming up. Welcome back. Well, let's focus on a couple of names then. Oberoi Realty, just take a look at that stock, the way it's moving. It's up closer on 3%. I think the last couple of days, the stock has been moving pretty well. And United Breweries as well, that stock, in fact, has spiked up. It's up closer around 3.5%. Amrish Balega is still waiting by. Hi, Amrish. I wanted to ask you about your view on Oberoi Realty. The stock again has come to life. It had corrected from around the 1,050 odd mark to sub 900. But in a few days, it's back up towards 1,000 rupees. How do you view the stock?
Just on Oberoi Realities, but real estate overall, I've been quite bullish on, especially the last, I think, 15-18 months. And that too on affordable housing, which most of these larger players are also now concentrating on, because that's the fastest growing part of the market. And if you look at the sort of registrations which have happened in the last 4 months, or even if you go back the last 8 months, it's record registrations which have been happening. And especially now with the commodity prices also correcting, at the same time you have had the real estate prices moving up. Because of the commodity prices, they moved up about 5 to 7%. That is not going to correct. Whereas commodity prices correcting is positive for the real estate companies. So I think if you are looking at the next possibly 12 months to 18 months, time to still be bullish on most of these stocks. So whether you talk of Godrej or Shobha or even Oberoi, I think one should be looking at buying these from a longer term perspective. Short term, we could possibly see a correction along with the market, but longer term, I'm quite bullish.
Okay, longer term is quite bullish. 17,959 on the Nifty and 39,668 on the Nifty Bank. So clearly, Nifty Bank stands out once again today in the outperformance. Amrish, view on Dr. Reddy's down 2%, and in fact, there's been quite a bit of pricing pressure out of the US, which is hurting some of these companies.
No, and again, I think this pricing pressure was clearly expected for a while. So whenever, since this news has come now, we are clearly seeing that correction. But I would say that one should utilize this correction to buy into Dr. Reddy's. In fact, I would be a buyer closer to about 38.50.
Okay, all right. Amrish, what we'll do is we'll get some more market opinion for our viewers. Now, we spoke with Andrew Holland, Chief Executive Officer at Devendus Capital Public Markets Alternate Strategies. He says it's possible that we see some correction in the markets in the near term. He's tracking some of the global indicators closely, and he thinks things are not looking all that great. Markets are strong for now, but he does expect a turn in the near term. Listen in.
We could stay higher for longer, but it's all markets, including ours, are looking very overbought. I think the Goldilocks scenario, which people are trying to bake in, is probably not going to turn out to be that at all. So I think it's whether it's a fair market rally for us, but certainly globally, I think it is. So you could see a downtick from here because the Fed minutes were not conclusive, shall we say, in terms of what they were trying to say. So I think the Fed will have to do more in terms of rate increases and get the aggregate demand down, because it's certainly a problem, I think, for the US. The trend for the auto sector is demand is there, that's for sure, and with commodity prices, having kind of eased a lot, probably will continue to ease. That's going to be the tailwind for the sector. So I think whilst I'm saying that, it could be one of those which will see some profit taking. Banking and autos and consumer discretionary are sectors which, if there is a fall led by these sectors, is where you should be picking up, because I still think the deflation trade is going to play out by the end of the year, and that leads to these sectors. So I haven't moved away from that. I'm just worried about some of the things which the market's trying to just take in its stride and say everything's going to be okay. The IT stocks are going to be really a hostage to what happens to the tech stocks in the US, and that's been playing out for some time now. The correlation's very high. So if you have a very positive view that the tech stocks in the US are going to start doing well, which I don't, then I think this rally in IT stocks again will probably fade as markets correct and tech stocks correct in the US, because I think that's where the most pain, I think, will be felt in the US economy. IT is probably I just don't think there's enough tailwinds for the sector, given that it's just following what's happening in the tech stocks in the US.
Okay, let's start wrapping up the market action for the day then. The market's ending at the absolute high point of the day, and that just highlights what respecting the market's texture could mean. The Nifty gave a dip, and a good dip, to 17,850, 860. Absolutely the zone from where it was perhaps due for bounce, and it did bounce more than 100 points. And the Bank Nifty outperformed, up about 220 points, up about 0.5%. In terms of individual names, Kotak Mahindra Bank was the stock of the day from the index, up 4% on that. Larsen Toubro up 2%. Tata Consumer, IndusInd Bank, Bharti Airtel, ITC, State Bank of India and ICICI Bank were the other stocks on the gaining side. On the losing side, you had ONGC, which was down about 3%, UPL was down 2%. These pharma names were down, but the real pressure for the market was on account of the IT names. So Wipro, Infosys, TCS, HCL Tech, all these stocks were putting a bit of a pressure on the market. But the broader market also had a decent day, Prashant.
I mean, 1,200 stocks nearly higher and about 1,000 stocks lower. So difference is not that much, but positive, advanced decline. IRCTC was up the most with volume, 7% higher. Indiabulls Real Estate moved up 6.5% at 81. India Cements 5% higher. Jay Corp 6%. BF Utilities 7.5% higher. All with some of the largest volumes. Bajaj Electrical 6.5% higher. Actually, Reliance Infra 7% higher, comes up with volumes. Repco Home 11%, back above 200. KRBL with a 5% gain. There was Mirza International, which was up 7.5%. Ruby Mills 20% higher. Rane Holdings 16%, big volumes. Orient Cement 6%. There is what else? IFCI 8%. La Opala 7.5%. Zuari, which is at about 182, 10%. Sunflag 7%. I mean, I'm wondering, looking at some of these names and the kind of names which are starting to rally on volumes, makes you wonder. But in any case, Nelco 10%. There was, Sanghi Industries 7%, Nitin Spinners 6%, and so on and so forth. So that's the bulk of the volume-led gains that we had in the market today. Nigel.
Well, let's talk about stocks that only were in upper circuit. DCM, that was up closer around 20%. DCW, that was up closer around 15%. Orbit Exports, the stock was flying away in today's trading session, so that stock is well up and about. Vesuvius, we normally don't talk about that stock. Well, that was running away. TVS Electric, another stock we don't talk about very, very often, that as well spiked up. And, Adani Enterprises, I think you should keep an eye out on that stock. Remember, there's a nifty rejig that takes place. And over the last few months, in fact, the street has been factoring in that maybe this one gets a look into the Nifty. So, that's another stock that you should be keeping up. Even in today's trading session, it ended with pretty strong gains. Towards the end of trade, you had IRCTC as well that was flying away in trade. Well, so to wind things down, the buy on dip strategy worked yet again. The thesis is intact. You buy at the lows, and in fact, you make some money. And getting the lows, that seems to be the only question, because yet another day when the markets ended in the green. The mid-cap index, relative outperformers, and the Nifty Bank, after underperforming for 2 days, well, it came back, and it came back in style. We'll wrap up on this edition of Closing Bell, but you don't go anywhere. Our Thursday special, Big Deal, comes up next.